In this video, you're going to see two live trades I took from this morning session. You're going to see a pre-session price breakdown, a full live session of me reading price, how I avoided entry on two false breakouts, and how I found two entries that successfully followed through to make me over $12,000 from this morning. Then at the end of the video, I'm going to come back and break the trades down further for you. By the way, if you want to learn everything I know and trade live along with me every single day, click the link below. I really think you're going to enjoy this one. Good morning. It is Tuesday, August 19th today, and just doing some early morning price analysis. Yesterday was a fairly range-bound day with the exception of a few breakouts. We established a high at this wick at the 945 candle. We swept it and reversed, and interestingly, we closed right at it at the end of market. At least we bodied at it. In the after hours, we came down. We took the low at right around 643. I have 643.01 marked. In the aftermarket, we pushed up, but then we gapped down into pre-market, and I have the pre-market low set at 642.41 and the pre-market high at 643.35. We did sweep that low on the first candle and actually swept the previous day low, but did not close below yesterday's pre-market low. What I noticed on the way back up is we didn't really react to pre-market low. However, we did strongly react off of pre-market high. We swept that. Now we've come down below aftermarket low. And so that's what you see on the 5-minute. I'm going to show you the 1-minute chart really quickly to see if we can get a little more information here. So I'm going to add a chart, and now you'll see the 1-minute chart on the right. You can see we did have some engagement around the pre-market low. No, it wasn't the pre-market low. It was a number of body touches on the 1-minute chart at 642.69. Now we're coming back down, approaching pre-market low. I'll be interested to see if there is some engagement around 642.41 if we get down there. I did see that it was respected as support on the 1-minute chart. You can see it right there. And we'll see if it does engage the pre-market low. And then I would say we have draw down to yesterday's pre-market low, at least down to these bodies. But for now, we're range bound, not really forming any sort of strong structure for very long. Push down, push up, push down. A little bit of a bearish signal now. We had a bullish move here. So anyway, we'll see what happens if these levels get respected. And yeah, we'll see what the morning session brings. See you soon. All right, so I'm seeing some engagement here at the aftermarket low. I have it marked just above 643. I'm going to let this settle down a little bit. It's been kind of coming after all these levels. So I have the yesterday's pre-market low marked at 642.8. We did sweep that. We didn't body below it. So we reacted there. After that, we came back up. We swept pre-market high, bodied down below aftermarket low. Interestingly, we actually respected pre-market low from today on this candle. And then on the way up, we swept aftermarket low, and now we're coming back down. So this to me is just a little volatile to want to engage. It hasn't really picked a direction just yet. If I had, let's say, we said, well, you saw reaction here at the aftermarket low, but how I'm reading this structure is after we took the low down here, we had a low, we had a high, higher lows, higher highs, higher lows. This is bullish. And so you can say, oh, you close below key level. Yes, we did, but that structure had not broken yet on the 5-minute chart. And so this is telling me, especially since it didn't take this high, that price is still encouraged to push up. Now I see it reacting here again at aftermarket low. And so I think we just got to let this play out a little bit to see what this wants to do. Like if it comes and it fails to take aftermarket low, I'll look for potential support where we might react in here. We had a lot of indecision throughout pre-market, and so I won't be too tempted to look for puts as any sort of higher level of support just yet. I am interested in what happens if it comes down and tests pre-market low, and I'm also interested in what happens if it tests pre-market high at this point. And then above pre-market high, we have our aftermarket high way up here at 644.16. And then interestingly, if you remember yesterday, we had our first initial high wick up here. This is where we took calls and it reversed. This was a very clear false breakout. We ended up closing right at that level, and so I'm keeping that as overarching resistance potentially. And so we have decent draw up, but again, this to me hasn't really picked a direction yet. It hasn't been decisive in either direction just yet. I want to see if it comes up and tests pre-market high, and then we'll see if we can get a push potentially up to the previous day close and then aftermarket high. So let's see if we can get a test right around that 643.35. I'd love a touch right to the penny on that to confirm that level. Haven't gotten it quite yet on this candle. Okay, let's see if it reacts. There we go. 2 minutes left, and I'm going to pull up some call contracts. I'm looking at August 20th. They're a little expensive, but the 643 calls are priced at about 170 3 or so. These contracts are moving kind of quickly. Look at that push. Let's see if we can find some humility in this candle here. What we saw yesterday with, a massive green candle and then a reversal, I don't want to get in a position where we repeat potentially a same push. So I'll want some room for our draw on this one. I know that that's not always the case, but you can see we have a massive amount of room for a potential retracement that would stop us out. So I'm going to be watching closely. We have just under a minute left. Look at that go. And so seeing that reaction to that initial high we took yesterday, now this looks incredibly strong, obviously. I'm going to make the decision to stay away from this candle because of the potential chance for retracement. What this does, though, however, it leaves us a ton of room for a potential setup, finding a new range, potentially coming back down to pre-market high. If it does find a new range, and let's say that we find higher level of support and push and test higher, we will enter. But at this point, we're almost at that aftermarket high already, so staying away. But if we do come up and we test that aftermarket high, I will be interested. Okay. I want to see a higher low established. I want to see some buying pressure closer to where our entry is. That potentially will protect us. See, we weren't protected at all the way down here. I don't know what those contracts moved, but really broke through two significant levels. So pre-market high, previous day close, right near aftermarket high. And so I want to see if this is our new range that can be established at this point. And then I'll feel more confident that we can be protected if we find some higher level of buying pressure. I'm going to see what those contracts did just out of curiosity.
I think like 221 down to 214.
Okay.
Actually,
that's not bad.
Yeah, no, well, sorry, excuse me. The low was, I think, 208, something like that. Again, still not bad.
220, 206. We'd still probably be in this trade with we definitely would move 14 cents. So we'd be in with a 10% stop. Let's see if we find this new range here. Again, this 643.80 is the previous day close. It also was at initial high. We had a false break above it. We had tested it again, rejected, and closed at it. So that was probably the level that I would like to see if it's respected as opposed to where this bodied. The nice thing is if we do take aftermarket high, a close near here, with those contracts would likely be about the same of where this candle started, depending on how this erodes. And so this could still be an entry that I'd feel more confident, especially if it reacts here. Then we could use that, which was resistance, as support to push even higher. And so no FOMO if this pushes up, because our entry could be right up here if it gives it to us. Now I'm going to be paying attention to 643.80.
We formed a lower high on the 1 minute. Don't quite see it on the 5 minute yet.
A good amount of room down from previous day close to pre-market high potentially too. So I'm going to mark that same level on the 1 minute chart just to see if we can see how the 1 minute candles react to it. No bias at all right now. Got a little more typical movement now. That was a wild candle. Okay, we're approaching 1 minute left on the 5 minute chart. Let's just see if we keep getting reactions off of 643.80. I don't have either contracts pulled up just yet. We have not confirmed resistance up here yet, not close to support, but we'll be watching close. Wouldn't mind if we hung in this range for this, at least for another candle or two. I'm just going to take a peek at the call contracts really quickly. So we have just 10 seconds left. Likely not going to be an entry, but I'm keeping an eye on the 644 calls now. 5, 4, 3, 2, 1, staying away. Perfect. Okay. I think we got a pretty clear range. Let's see if we react up here. Again, that's the aftermarket high. Didn't take a higher high on the 1 minute. So this could be setting up potentially like a reversal, but we'll see. Still very strong on the 5 minute chart, obviously. Would love a reaction to the penny up here. It's going to be a really telling candle here. So just talking through avoiding the entry here. On some days, that would be a slam dunk entry. Powerful candle, ripping through previous or pre-market high, previous day close. The reason I felt very convicted to hold off, again, because most recently when we had a massive breakout candle, we got reversed on just yesterday. If SPY had been moving like it had potentially June, July, when the breakouts were just going crazy, I probably would have taken that entry. But most recently, I've been told that when it breaks out, it does not follow through. And so using that information, decided to hold off.
Nice. What's really attractive about the way that this is setting up right now is it's consolidating and forming this range just above previous day high.
Yep.
With those final couple candles heading into the close where we have resistance there, 643.80 is exactly what we're holding on to now and failing to make higher highs. So
yep,
beautifully up here.
So we have over 2 minutes, but I'm looking at the August 20th, 644 puts. They're priced at about 143, 144 right now. The nice thing is we have most recent price action ripping through this range. No resistance at all. Yes, we did have some kind of scattered price movement in the aftermarket, but most recently did not find any key levels through here. So could potentially predict a fast move through here. Now I have the fair value gap. We have a ton of liquidity sitting in here, buy liquidity that potentially could cause price to hit some speed bumps, but again, no key levels established in most recent price action. Beautiful. Okay, those contracts are up to 154 now. SPY, August 20th, 644 puts on a firm 5-minute candle close below 643.80. Just over a minute. This could be quick. We could see, I kind of call it like a seesaw pattern as we tap into buy liquidity and then go after more of it. And so we also could see quick move down and quick move up. So want to be executing quickly potentially. Again, August 20th, 644 puts on a firm 5-minute candle close below 643.80. 30 seconds, 20 seconds. I think if this closes below, it'll be firm. Do want to close below that level though. Watching close, 10 seconds. Watching close, 5, 4, 3, 2, 1. Buying here. Let's fill at 153, and I'll put my stop in at 137. That was close to being firm. We did close below. I think it was firm.
Yep.
It was firm for sure.
This could be quick. I want to use that level as resistance now. This could be quick, everybody. Just be ready. A little bit further. I'm going to try to get my stop off right around here and potentially take some profit if we push into that fair value gap. Taking my stop off. One more push. I'll put my stop back on at 137. Could have gotten some profit there, but we went to quite a bit, 10%. Everything's been following through, so I feel okay about that. Taking my stop off, and I'm going to take half off here at 166. I got filled at 165. Stop to 152. Didn't want to get greedy on that second attempt. We were reacting to that buy liquidity just like we thought we would. So stops at 152. I think that'll keep us in here. And we got more to go after here. So be ready again. Couple cents away. Still in it. That's too bad. Let's see if we can get it. One more push down. Let's go SPY. Couple cents away. Still in it. Stopped. I thought we were going to come after, and I thought we'd come back to pre-market high, but we got half off. Stopped at break even. About a 13-cent move, so not quite 10%, but we came close. Again, why these fair value gaps help with my execution is you can see, and again, I have the Spaceband BTC, and I know that Jerry and Andy don't use this, but I'll just share why I use it. The difference between this one and the Lux Algo is that you can see when price pushes into it that those fair value gaps shrink, and so you can see where, if it comes back down, where it might hit some buy liquidity again. And so when it came back down and pushed into it and then reacted, and then the second attempt, I waited that first time because we didn't quite get to 10%, but we held this as resistance like that, like my thesis would, a key level that holds a support will likely as resistance. And so felt just fine letting it give it another attempt at holding as resistance. But the second time, like I said, I didn't want to get too greedy. And so I was fine taking at 8 to 9%. And then we gave it a shot to take more, just didn't get it. Does that make sense?
Absolutely does.
And we got plenty of time for another setup. Just give us some time to establish a range again. We know we've invalidated this for now, and it's looking like it is just going to consolidate for a little bit again, which is fine. It's interesting. We're like finding like a 1 or like a 3-cent range here.
Yeah, I modified down from 643.80 to 643.77. But I see what you're saying on that tiny little range.
Although I could be convinced to take this entry here. We've confirmed this as resistance a number of times. We've got a minute left, so I'm going to take a peek at those 644 contracts again. I think I'd want it below this wick here. And so I'm going to say August 20th, 644 puts on any close below 643.71. And I'm just doing that to mark that we've closed below this wick and that it looks like it'd be firm. So again, August 20th, 644 puts on a close below 643.71. 20 seconds. And if we don't get it, I'll move that line back to that 643.80 just so we have some clarity around that level. Gonna be watching close, not looking like we'll get it in the last 10 seconds. And I'm not looking at calls just yet, and I'll tell you why in a second. Staying away.
Yeah.
Okay, so some people would say, well, wasn't your range this 3-cent range? Yes. But, and this could push up, but the 1 minute can be helpful, when you're trying to decide, like with a 5 minutes not really telling you much, and I'm not this, and Andy doesn't typically like talking about trend lines, and this is not for taking entry because obviously this is not precise. The 1 minute was telling me this was shaping up to be bearish, right? And so it's like, well, you have a 3-cent range. Yes, but I was only considering puts within that range because of this and this. And I still could be convinced in puts on this candle, depending where this goes. Oh, I wish we could have gotten that. No worries though.
It did not offer conviction.
Nope. No conviction. Not even at that. If
Not
we had
even a
left
little
that,
bit.
that level as a bounce off of resistance, it actually closed above that. So there was no way to find that entry there.
Right.
Got a lot of time left, so I just want to see what this candle does.
Ryan, Eric's on fire, man. He's going to be on your interviews before long.
Tell me about it.
He's absolutely crushing it.
There was our move.
Man, what a candle. What is going on?
You son of a gun, SPY. That was what was supposed to happen on our entry. SPY, August 20th, 643 puts on a firm 5-minute candle close below 643.01. I'm going to be sizing down. Now I want this to close below the aftermarket low, okay? So we're going to be watching close. There's a reaction to it. August 20th, 643 puts on a firm 5-minute candle close below 643.01. Watching close. 3, 2, 1, staying away. That was the move I thought we were going to get, Andy and Jerry. God dang it. That's
Yeah,
exactly
man,
what I was envisioning. Rip right through that and go all the way down and sweep aftermarket low. That would have been a nice one. With that speed too. I think that those contracts hit like 206, I think.
Yeah.
And when you get like these long intra-candle distributions, no FOMO. There's a lot of clarity around where levels are. If we had closed here, I probably would have taken it. When we swept aftermarket low, remember these levels are levels I drew before I signed on. They've been respecting them over and over and over. And so my conviction was, if we take this, we've got drawdown to here, and we don't until then. Now, I don't know if we would have gotten stopped out or not, but again, underlying support reacted. We wait for entry below at this point. It's been giving us a lot of room to distribute, but it's been that kind of the intra candle distribution, which is a little bit unfortunate, but still like the opportunity that it's giving us. So again, levels being respected very cleanly. And so we'll wait for our opportunity. And if it gives it to us, we'll take entry and hopefully we get one of those distributions while we're in the trade. That's all we can hope for. Testing pre-market high again. Gosh, it's only been a half an hour. This feels like it's been 2 trading sessions already.
This is it's another challenging price action day in my opinion.
Yeah, I mean, the price action's clean. It's just the timing of the distributions have been a little challenging.
Exactly.
It's actually a lot cleaner than yesterday morning, like you pointed out, Jerry.
Yesterday morning was I feel like yesterday as a whole was a challenge, or maybe I'm just over analyzing it, but I feel like yesterday was a super challenging day. Like I was having a hard time getting a good read
Oh,
on price.
that's gross.
Crushed it though.
That's ugh. This is way cleaner. You just have a push down. You got very, very bullish structure. Lows, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, high of the day, lows, lower highs, lower lows. It's pretty clean. It's just how, and then lots of distribution. But again, you get these big distribution candles. Yeah, I think it got to like 8% down here. That initial reversal up, you would have stayed in. You would have had to really time this perfectly to get 8% before getting stopped. So I feel good about staying away. I'm kind of assessing, back testing, as I go along, and I'm trying to install this into my long-term memory as I go along, as I'm gaining more information about how the market's behaving now. So again, conditions change every day, right? They change every month, they change every week. I want to be aware and engaged with what the market's doing right now. And by verbalizing, talking it out, looking at entries, staying away, thinking through why did I take it, why did I not take it, and then being actively engaged in what happened afterwards, that's staying in my long-term memory. Okay. And so I'm dialed in. I know exactly what's happened most recently. I'm not saying that I know what's going to happen again. I'm just aware, and that helps me. That helps me kind of just stay with like market conditions, kind of saying, okay, well, I remember this would happen. This would happen yesterday. We had this big distribution candle, but I didn't have to look at it. I remembered it. And that, obviously we took that trade, but the more actively engaged you stay with the market, the more it's going to be absorbed and you're going to remember it. You're going to have that at the tip of your fingers. Again, we're still finding all of this within a very specific strategy, a very specific execution doesn't change. We always put in our stop loss. We always wait for 5-minute candle closes. But again, if you see something that's happened recently and nothing in between has told you something else, it's okay to say, hey, hold on a second. Last time it did this, it didn't follow through. I'm going to stay away. It's always okay to stay on the sidelines. If I, had to run upstairs to answer the door, I miss a trade. So what? You don't have to take every trade that presents, because something will always represent, and it could be a better spot than last time. So now, again, I'm looking at what happens here at aftermarket low. Open to a wide retracement on this long distribution candle, continuing the bearish move, but with a lower high. And let's see what happens here. We got over 3 minutes left. Hopefully it stays kind of in this spot here. Would actually kind of love if it holds and then in the next minute or two retraces and then closes firm. That'd give me a lot of conviction. So I'm looking at, again, the August 2643 puts. They're priced about 151 or so right now. I'd love for that level. Here, I'm going to adjust this here. In the 1 minute, 643.01. We didn't have to even quite tap it, but finding selling pressure. Let's see if we can get one candle to just be a little more humble here as we're looking for a setup. Just under 2 minutes. Again, I'm looking at the August 20th, 643 puts on a firm 5-minute candle close below 643.01. All right, we got 40 seconds left. Sorry, I'm going to look again at the 643 puts on a firm 5-minute candle close below 643.01. Please hang out, SPY. We want to take entry here. Looking to take entry here. We've got a nice lower high on the 1 minute. 20 seconds. August 20th, 643 puts. 10 seconds. 5, 4, 3, 2, 1. Buying here, filled at 164, and I'll put my stop in at 149. I'm sorry, 139. Sorry. Hopefully it doesn't matter. I can't do the math here. I'm going to move my stop to 145. Okay, we want to see if we can use this high as resistance. Let's see if we can get a push down here. If we can get a fast move below this wick, I'll look to potentially take my stop off. Let's see what we get. Taking my stop off, one more push, and I'll take half off here at 179, filled at 179. Stop to 165. Wasn't quite 10%, but we came close to that. Let's see if we can rip through this now. Come on, SPY, do it to us. Stops at 165. If we rip through this level, be ready to execute quickly. Okay, stops at 165. I hope we get a rip through here. That'd be really nice. But if it doesn't, no big deal. We got our stop in at 165.
Yeah, obviously we're risk free for the second trade and everything is great. These contracts are moving so well though. Let's see here.
Taking my stop off, and I'll take another quarter at 191, filled at 190.
Well done, buddy.
Stop to 175. Stop to, hold on, 175 still. Stop to 180. Stop to 185. Stop to $2.
Yes, sir.
Hang tight. Come on. Stops at $2. Come on, a little bit more. How did that tap me? Okay.
I just got me too though.
What the heck? That was, it actually sold when it looked like it only got to 202.
That's all right. We're at
There's our
are so
move.
fun,
We got
man.
it. See, patience, right? No need to rush into any of these. You know, it's like, oh, FOMO here. Oh, FOMO
Good
here.
work,
No,
Ryan.
no. There's our move. Got it. Let's go, guys.
that.
Good
was
work, buddy.
incredible. That was so awesome.
And there we have it. One of my favorite trading sessions I've had in a long time. A ton of analysis on that live trade, and I left it on there on purpose because I wanted you to hear exactly how I talk about price action as I'm trading live. But let me break this down for you very simply. Here's what I was seeing. Again, when we start the morning session, the easiest way to find our levels is to look at both the aftermarket or Asia session and the pre-market or the London session. The aftermarket is in this blue area here, and the pre-market is in this yellow area here. The New York session opens at 9:30 Eastern time, and that will be the white section, and that is what we trade. First of all, I noticed that there was a very clear aftermarket or Asia high right at the top of this wick right here. So I will mark that after high first, right around 644.15. I saw a very clear aftermarket low at the bottom of this red wick right here. And so I'll mark the aftermarket low next, right around 642.99. And then I wanted to mark the pre-market high right at the top of this green candle here and the pre-market low right around here. So let's mark those, and I'll make those a little different color so you can see those a little bit easier. Once we have those four levels, then we can enter the New York session and make modifications if needed. So what happened once the New York session opened? Well, we had a push down and we established our first low. So let's mark that here. Now, when I'm marking the lows in the New York session, I'll often mark where that first candle bodies, and I'll ignore the wicks to start. And so I marked that level at 642.14. At that point, we had a very clear swing low. We pushed up, we established a high, a higher low, a higher high, and a higher low, very clearly entering a bullish structure. At that point, we wanted to look to see what did we predict was going to be resistance. Well, we had our pre-market high, and we had already tested it once in the open market, and so we were watching to see if we could get a reaction and a firm 5-minute candle close above 643.35, which we did on this candle. However, we did have an overarching level of resistance at the aftermarket high, right at 644.15. Remember from my prior video, in addition to 1, finding your levels, 2, taking 5-minute candle closes above resistance for calls, or 5-minute candle closes below support for puts, we also look for 2 more things, F and D. And remember, those stand for firm and draw. So adding those 2 elements, we want firm 5-minute candle closes, meaning the bodies are longer than the wicks, and we want to see if we have draw, or room above where we take entry and calls, or room below entry where we take puts, before we run into another potential key level of overarching resistance or underlying support. So because of where this candle closed, we noticed we were very close. We found our levels. We saw a 5-minute candle close above resistance. We had a firm close, but we did not like our draw. We did not take entry. And it happened to work out in our favor because at that point, price didn't even quite reach aftermarket high. and turned around. What I saw next, where was support going to be formed? And for this entry, I utilized an additional chart, the 1 minute chart. Let me pull it up right now. Now I have the 1 minute chart on the right. And what I saw was once we turned around at the high of the day currently, we found support forming at the bottom of this red hammer candle. And so I'll mark that level right at the bottom here, 644 flat. And what I used the 1 minute chart for was to recognize, was price structure shifting from bullish to bearish? And the way I used the 1 minute chart was to see that we did in fact have a retracement red candle. We came back up, we found a higher low, we found a lower high, and we saw price reacting on the other side of that same level, which was support, now resistance. And so that confirmed that was going to be a key level. And if price could close with a firm 5 minute candle close below support, we could take entry on puts. If I had not seen that on the 1 minute chart, this could have just appeared like a retracement. However, because we saw the structure shift, we read that as a reversal. And so when we had a firm 5 minute candle close below support, we took entry, and we had a nice distribution down to the bottom of this wick, got half our positions off, and then got stopped at break even. Now the next trade, we were looking to see where was support going to be formed again. And we noticed that we saw buying pressure at the bottom of this candle. It was respected again on this doji candle and again on the next successive candle. And so we were looking at support forming right around 643.77. When we did end up getting a nice firm 5 minute candle close below there, we were assessing whether or not we wanted to take puts again. However, if you look at the D portion of our criteria, did we like our draw? Well, you can see this actual candle did close firm, but it found buying pressure right around 642.99. What was that? That was our aftermarket low. And so again, we did not like our draw, and so we avoided taking put entries here. What happened next? Price pushed back up. We would have been stopped out here, but we avoided that put entry. However, we found selling pressure right at pre-market high and then pushed down again. At that point, we found clear reactions off of the aftermarket low, which we marked as support. And when this next candle closed firm below aftermarket low, we looked to see, did we like our draw? This entry looked a lot different than this entry because our underlying support was not until pre-market low and potentially the low of the day because we had so much more room. And so we did in fact take entry on puts at the bottom of this candle, and we distributed down for a full trade. If you got a lot of value out of this video, please click the link. If you got a lot of value out of this video, please subscribe to my channel. New content coming multiple times a week now. By the way, if you want to trade live with me and learn everything I know, please click the link below to see if you qualify. See you in the next video.